Hi, I'm David Schneider, your trusted estate planning attorney. Today we're speaking with Scott Zimmerman of CorpStrat. CorpStrat is a life insurance brokerage firm. Scott deals as a life insurance specialist, long-term care specialist, employee benefits specialist. Scott, we were talking about some of these benefits to life insurance beyond I have to die, right? There's other tools that we can use through life insurance. Talk to me about this.
There's some great tools that some are built into the policy and some you can add on. But one really important rider that most companies have built into their policy, you're signing a form saying you want it, no cost, is an accelerated death benefit rider. And that basically says most companies are 1 year or less to live, you're terminally ill, that the company will allow you to tap into that death benefit if you need it now, whether it's care, medical care, whatever is needed. But if you have a year or less to live, you can tap into it. So it's a nice, important rider that people use.
So this can be in a benefit, not just a benefit, but a help to our long-term care.
Well, that can be there. That definitely you can use it for whatever you need if you're terminal. Another thing a lot of newer policies have, you'd have to add it on now when you're buying the policy. It's a long-term care rider. And a lot of people, which means you can tap into the death benefit to pay for long-term care insurance if it's needed. Home health care, nursing care, all aspects of long-term care. What's really important to know is most people, everybody's interested in long-term care, but when they see the premiums, they don't ever want to pay it, and they never think they're going to need it. But statistically, 70% of all people over the age of 65 will need some form of long-term care for an extended period of time. So that type of rider is really popular right now because it's one of those things you hope you never need, long-term care. But if you do need it, you can tap into that death benefit. Some companies are 2% up to 4% a month to pay for the care, tax-free.
Wow, this is super
really good.
Important because, yes, geez, 70%, that's a huge number. All these people. So they're utilizing these policies not just to keep their promise to their family to here's a chunk of dough if I die to replace my income, but they're able to use these monies for other important aspects of their life.
Absolutely.
And the companies are paying interest on that, and it's secure.
Secure.
Wow.
If it's set up correctly, they're secure. I always say that because I think it's really important you always want to make sure your policy's set up correctly.
And I've always been a big proponent of utilizing experts, and that's why they come to somebody as opposed to going to the internet and pulling it out. One of the things I always like to point out is that it's impossible to know what you don't know. We've been speaking with Scott Zimmerman of CorpStrat. Scott is a life insurance, long-term care, and employee benefits specialist. Scott, let everybody know how they can get a hold of you for this important information.
Our website is corpstrat.com, or you can email me at scott@corpstrat.com.
And I'm David Schneider, your trusted estate planning attorney, your trusted advisor. I hope you find this information useful. I know I certainly have. Check out our other videos. Go to our YouTube channel, hit that like button, subscribe, and see all of our fresh content. Thank you.